Good evening, ladies and gentlemen. Welcome to this call. It is Crypto Talk, and it's Monday evening, the 24th of October. And for tonight, we have a full program for you. And we're gonna show you your emotion tonight. Plot out on the charts, and we're gonna talk about your emotion. And I've seen Jason going about showing people exactly where their emotions fall onto the charts. And tonight we want to explore that with you and say, but we are emotional beings, and we have emotions, and we trade with our emotions. You can never, ever trade without your emotions or emotion out of it. Although we always teach and say you should trade without your emotions. Your emotions should not be part of this. We are not, it's not that easy. We are human beings, and being human beings, we trade with our emotions. But tonight, we talk about your emotions according to the Wall Street cheat sheet. And that's the topic that Jason came up for us for tonight. And thank you, Jason, for always just being, my apology, that's the wrong one, for always just being there. And we're going to look at that from all angles. But before I continue saying anything, let me just introduce our speakers for tonight. And the first will be Jason, our subject matter on crypto trading at the Crypto School. And Jason has been crypto trading and living off crypto for quite a number of years. And he's just coming to visit us every Monday evening to come and share with us. So thank you, Jason, for being part of the community and for loving your love for the charts, your love for your trading view charts that you set up, and your love for crypto and your love for people. And you're just a passionate person that loves to help people. And remember, ladies and gentlemen, we don't do any financial advice. We purely come and show you what we do. We purely come and show you what we found working in the market. And Jason is one of those guys that just want to come and help you. So Jason, without further ado, say hello to the team.
Good evening, everybody. Thank you, Daniel. Yeah, I like your introduction there, more specifically around my passion for crypto and my passion for people. The only thing is right now, and it's not just Crypto Talk, but it's on most YouTube channels, is that the numbers have died off. And that's unfortunate, because this is a time where people should be starting to do the homework, educating themselves in preparation for the next run, because that next run will happen at some stage. But the saying is that the money's made in the bear market. And what they mean by that is getting into the right coins at the right price in order to sell at the next high. So the key is not in the selling, the key is in the buying. And you want to make sure that you buy the right coins at the right price in preparation to obviously sell at the top of the next bull market. But before we get to the emotions in the market, I'm just going to go through quickly what's currently happening in Bitcoin and in the stock market. So I'm going to first of all share the crypto bubbles for the week. And I'm on the top 100. And you can see that last week was quite bad for the market. We did pick up on Friday after there was I wouldn't say announcement, but it came out that the Fed could possibly pivot going into December. So there's a possibility of them pivoting on the interest rate hikes. And it won't be the current sort of 75 basis points hike to a zero. They might do like a 75 in November, go down to a 50 in December, then next year go down to 25 and then to a zero. And that's what they mean by a pivot. But nonetheless, yeah, last week was quite bad, except for Friday. And you can see that the number of green bubbles here is far less as a percentage compared to last week. But nonetheless, we got some nice moves here. Clay, 45%, Harvey, 11%. I see Ed is on the call here tonight. Hex is at 18% and has had a massive move up today specifically. We need to keep an eye on Hex. Any announcement by Richard Hart regarding the Pulse Chain launch will absolutely push this Hex price up in anticipation of the what's the right word, when it's not cloning, it's copying the amount of the coins that you got on Ethereum onto the new Pulse chain. So Hex is going to be one of those star performers going into that. Sun 12, Carver 7, Nexus 6. If we go to Binance Exchange, this obviously lists outside the top 100, and we can see a few more greens coming through here. Knowles, Render, 18%. That has a nice move over the last couple of days. Oh, keep an eye on that coin, 18%. VIDT 42. And then we go to KuCoin, the other exchange that most of us use, and these have got a lot of the micro alts on there. And we can see some other coins coming through here, Tone, WOM, MLN. So far less green as a percentage, but nonetheless, there was some movers over the last week. We go and have a look at Bitcoin, and last week's date was, what, it was 17th, I think. So the 17th of October, we were pretty much exactly where we are right now, at 19,225. And we've been in this range between 18,700 and 20,500 now since the end of August, in this range with absolutely no confirmation of a breakout or give us any direction. The one thing that did happen last night was that we broke out of this white resistance line that is coming from the 30th of May. And you can see touch on 30th of May and the beginning of June, and then end of August, middle of September. And price actually broke out of here last night to the upside. There wasn't much volume though. There wasn't much volume. If you just look at that volume there, that green bar at the bottom there, it's quite small compared to the other volume bars. But nonetheless, broken out, and we got rejected at 3,300, and it's come down to retest that previous white resistance line, was now access support. So where to from here? If we do find support here, the areas of resistance, and I'm just going to go to the other Bitcoin chart, the areas of resistance. First of all, we are on 19.3 right now, so that is green as support. Resistance, sorry, we went up to 19.6. So 19.6 is the resistance to the upside here. We've got the 2017 high that's been acting as resistance support, so it'll be acting as resistance here. And then further up, 20,100, and the important sort of 20,550 to 27.57 that we need to get through. Small resistances here, and the major one is up the top here that the price needs to get through to confirm a break to the upside, a bullish move to the upside. The support levels are still down the bottom here at this 18,500, and you can see it's been acting as support here since July. So July came down here 18,778. Once again, acting as very strong support, and this way the majority of the buyers are waiting for price to come down, and they seem to be buying it up and pushing price back up again. So we've broken out, but unfortunately right now there's no clear indication as to what is going to happen here. We've come down for a retest, which is positive. We're still above this white line, which is positive. So we need to see what's actually going to transpire over the next couple of days. We go and look to the drivers, first of all, of the stock market, which is both the 10-year yield and the DXY. So the 10-year yield last week started pushing up quite a bit, coming from a 4% right up to a 4.3 on Friday morning. So that is quite a big move. And that was actually causing the stock market to drop and the crypto market to drop. And then one of the spokesmen for the Fed came out indicating that we could possibly have a pivot in the interest rates for December, and that was pushed this 10-year yield down on Friday, but you can see today it started pushing up again a bit. And then the DXY, which is the strength of the dollar against a basket of other fiat currencies, that has also, since the higher in the end of September, come down to retest this white support line, has moved back up again and seems to be going sideways. in the last couple of days, this was Friday, it came down with the 10-year yield and has retested that the white support line. And that white support line is coming from the 10th of August. So actually a support for now. And right now, sorry, I just want to switch my phone off here. Right now, we are in a very tight range between this white daily support line here and a resistance here of 112.50. You can see price actually went up there today to try and push through, got rejected there, is back into this tight range at the moment. So we need to see what's going to happen over the next couple of days. You can see that this sort of wedge gets tight. Is the DXY going to break this support and move back down? Or are we going to go once again above this 112.50 level? So really everything right now is just in a balancing act to see what transpires. There's a lot of important news coming out this week, economic news that will affect the market. And yeah, it is quite an important week as far as our markets are concerned. If we have a look at the S&P, now the S&P 500 has been in this, okay, let me just go back. So we've been in this broad falling wedge since January. And of late, we've been in a smaller sort of channel wedge formation to the downside, and it's broken out here on the 17th of October. It broke out. It went right up to 3750, got rejected, they came back and retested this previous white resistance line, which is now support. Actually came all the way down on Friday to the June low from June this year. And then obviously the announcement came out from the Fed on Friday and it's pushed this S&P and the other stock markets, Dow Jones up, NASDAQ up, also up 1.85% today. And you can see what's happened here is that on Friday we came up, we hit this resistance area at 3750, and we've actually gone through it today. And we're up at the next resistance here at 3790. Now, if you go back and have a look in history here, this area here where we currently are is very strong support or resistance, and right now it's acting as resistance. You can see this whole area. Even if we go back in history, you can see a bit more here until 2020, same thing, showing us that this area is acting as very strong resistance. You can see there also. So we're in an area of major resistance, and the indicators are telling us that on the stock RSI, which is one indicator, is saying that's quite high, quite overbought there. On the daily should be still trending up, so that's still fine. The 12-hour still trending up, stock RSI is at the top, 4-hour still trending up, stock RSI is at the top. So RSI is saying there's still a bit of way to go. Stock RSI is saying that we're a bit overbought at the current level. So it's important in the next day or two that we do get through this resistance area and start moving up. And that will potentially take price up to 3.9, and 3.9 is a major area of resistance where I've got this sell here. You can see this whole area at the top here is very strong resistance. So hoping that it gets up there, and that will be very bullish for the crypto market if we do still carry on moving up in the next day or two. But this all hinges on the economic news that's going to be coming out this week. There's quite a bit of news going to come out that I think will possibly affect the market. So looking fine for now, the stock market. And then the Dow Jones, similar picture, for looking green today. Nice move up today at 1.24 on the Dow here. So I'll just quickly go through some other charts here, and I've gone through that. Yeah. So the Bitcoin dominance. Now, the reason why we look at this chart is to see where the money is flowing. Is the money flowing into Bitcoin? Is the money flowing into the altcoin? So Since the ETH merge in the first week of September, we've started moving up with the Bitcoin dominance as money flowed out of Ethereum. Ethereum sold off and it went back into Bitcoin. And you can see that Bitcoin's been going upwards, but in a wedge formation. Now, with a rising wedge is a 68% chance of a break to the downside. And if we do break to the downside on the dominance, that's going to be very bullish for the altcoins. But you can see that it's touched a few times, it's found support, and it's still inside that structure. So no breakout just yet. If we do break to the upside, then that's a 38% chance of a break to the upside. That will be normally a sort of parabolic, violent move to the upside. And that would normally happen when there's a major drop in the market, where money is flowing out of Bitcoin and altcoins, but altcoins quicker than Bitcoin, causing this Bitcoin dominance to rise. But we need to keep an eye on this, because this could be a first indication of a possible run in the altcoins if we start breaking to the downside. Yeah. So the total market cap, similar to what we saw in Bitcoin, has broken out of this pattern here, this resistance that comes from the 14th of August, broke out of it last night, got rejected at 900 billion. It's broke out, you can see there 900 billion got rejected, it's come down. The support here is 877. And the reason why it's in blue is because we've been in this range here, similar to what we saw on Bitcoin from the 18th September, where the bottom of the range is 877 and the top of the range is at around about 915. So it's been really trending sideways. Unfortunately, still in the range similar to Bitcoin. We need to see a break out of this 918 level to the upside here. Total 2, which excludes Bitcoin, it includes Ethereum, but excludes Bitcoin, similar, broken and hit resistance 527, come down to support at 515. Also no clear indication. Total 3, similar picture to still in the structure here, no breakout yet. Total 3 excludes both Bitcoin and Ethereum. So looking good, but we need some more confirmation of a breakout of these ranges. That's what we're looking for right now. Breakout a range for Bitcoin above this 20,000 sort of 500 level. We want to see that right now. Ethereum is just going sideways, really doing nothing. It did break out also out of this bearish pennant to the upside yesterday. It's gone up to 1372 and it's come back down now to 1339 and come all the way down to confirm that breakout. Pretty much in no man's land at the moment. Support is down here at 1275, bottom of the range. Top of the range is around about this 14 level. And right now we're below a resistance of 1353. So Ethereum has been very boring since the middle of September, just going sideways, doing absolutely nothing. Just going back here, some other information relating to oil. Oil is come all the way down from $130 in March this year, come all the way down to $83 at the end of September, has moved back up, got rejected at $100 and now is ranging between 90 and 100. We want to see another break with this 90 to come down and retest this level lower down at 72. That I think will happen getting closer to December. And that blue line comes all the way from history here from, I think, the 2008. So this was the Lehman Brothers, what was it called there, Donnie, that dropped in 2008? So that comes all the way down here, this falling
Lehman Brothers triggered it. So you're right.
We broke out of here in December this year, as I said, in March with the announcement of the Russia and Ukraine war. a massive push up in the oil here, parabolic move, a real Wall Street cheat sheet that I'm going to show you now. Parabolic move, came back down, had complacency up here to 125, and now we're going to come down and possibly retest this level by the end of the year down to $70. We do obviously want the Fed to pivot in December. That would result in the dollar weakening and the rand obviously strengthening, and we can get this rand out of this rising channel and come back down to lower levels that will help us at the petrol pump. The rising channel is normally bearish, 68% chance of a break to the downside here. This is a weekly chart. So we need to see going into December, the Fed pivot, cause that DXY to start dropping, and then the rand to obviously not strengthen, but strengthen against the dollar. And then your silver daily chart pretty much going sideways. Gold is stalling wedge formation, so pretty much going sideways. Okay, that is just an overview, a quick overview of the markets. I don't know if Marius wants to come on now. You're available.
Cool, thank you, Jason. And I know you want to just take a break to just help your voice, but we'll be back with you now. Let's first go and just visit with Marius and just check in with Marius and see the numbers of people on the call tonight is the lowest that we had this year. And we know it's because of the sideways market. And Jason, it's so tough when we look at the charts and we just see them shuffling sideways, and we need more candles to print so that we know what's going to happen. But the problem is those candles are daily candles. And to wait for daily candles to print is worse than waiting for paint to dry. Thank you for that. And we'll get back to you to go look at the emotion. And but first, let's just quickly run over and go check out Marius, the wealth coach, talking about day trading. And Marius, please tell us what you are busy learning. And I see Marius is not at his computer. He ran earlier for his generator, so maybe he's still out there. My apology. I did not see that before I gone to Marius.
That's fine. I'll carry on. That's not a problem.
Thank you, Jason.
So the theme of tonight is really just talking around the emotions in the markets. And when we look at a chart on TradingView, it just represents a whole lot of emotions. So if we go into the daily year, what we see is a whole lot of emotions where you got in an uptrend, you got greed pushing up. And when you got a downtrend, it is showing us fear in the market, pushing it down. And we can definitely say that for the last 10, going into 11 months now, there's been a lot of fear in the market that has pushed the market to where it is, coming from 68,800 last year, November. So if we go and look at what I want to show you here is called the Wall Street cheat sheet. And sorry, I just want to go back to 2017. So this represents a Wall Street cheat sheet, and it's in most markets, I would say every market, and it represents the emotions that you see in the market. And this takes place over small time frames, and it takes place over larger time frames. But if we look at on a larger time frame, and I'm talking about 4 years that we normally have in a crypto cycle, where we've got 3 years of uptrend and 1 year of down bear trend. So it's 4 years. So we normally start at a disbelief and let me go to the left-hand side here just to give you right-hand side, just to give you indication on time frames here. So I'm going to talk about the previous cycle at the end of 2018. So this was December 2018 was depression. We then moved up here to 2020 where we had the COVID drop. And if we go to the left-hand side where it carries on, We came down here into March 2020. And then from there, we carried on moving all the way up through these emotions, hope, optimism, belief, thrill. In November last year, 2021, we had euphoria and we hit 68,800. Price then came down, it went back up, complacency, and then from complacency, we've come all the way down here through anxiety, denial, panic, capitulation, and I would really say that we now at the anger stage. So I'm going to go to the chart and just go through it with you in the chart where we currently stand. But I would like to see in the chat right now, those people that are currently in the market or that have got any money in the market or traders, what are your emotions right now? If you can just give an indication in the chat there. So a clear representation of this is if we go back to look at the previous bull cycle, which was in December 2017. And you can clearly see here that we had a blow of top, euphoria. It came down in the end of December 2017, went back up into complacency, and then price just carried on dropping all the way into December 2018. That was over a year. Price then carried on moving up and starting the new cycle, and it hit a higher in, I think it was July. Was it July? Let me just push this up here. Yeah. So it hit here in June 2019 of 14,000. Price started coming down, and then we had the COVID drop here, and then from the COVID drop, price started moving up once again. So if we take the high from last year November, and I've plotted here the actual motions on at that time, and we can remember for those people that are in the market at that stage, there was Plan B talking about a price of $130,000 in December. And every man and his dog was trying to get into Bitcoin at that stage in anticipation of selling out at 130,000. Needless to say, that didn't happen. We only got to 68,800, and that represents this euphoria right here. From there, we dropped going into January this year. Price then carried on moving back up again into March, where we had complacency, and then dropped back down all the way to this important support here of 30,000 or 28,400, where we traded sideways for a month. Now, that important support was the support that we had last year between March and July. So it was very strong support, and then came out the lunar crisis that dropped the market, including Bitcoin, from the denial level of 30,000 all the way down to 17,800. And this was over a space of about a week and a half. So there was a lot of panic in the market at that stage around this time here, the 11th of June. And you can see what's happened now is that, and I must just bring up that Wall Street cheat sheet, is that this area here where we had panic capitulation, we came down to 17,400. It then went up to 25,000. And now we're down in this anger level right now. And we can see what happens with after anger. There's another rally, and then there's a slow bleed from there all the way down to depression, and then the new cycle starts once again. So right now, we're in the anger. We've had this move up to 25,500. We're down now in anger. Now, anger, I'm not too sure how deep anger goes to. Anger can be where we are now, but we could even drop a bit lower here in the next week or two. But I think from around about, I would imagine, and it's a personal view, I think we got another sort of week and a half, 2 weeks before we start moving up and we go into this November, December period, that's normally quite bullish for the market. So we also got the New Year's rally, and I think we're going to move up here. And where we're going to go to, we could definitely go back up to that 25,000 level once again and retest it like we tested on the 14th of August. But we've got this other important level of support, previous support of 28,400 up here that we could possibly go test also. So those are also possibilities. So there is a bit of light at the end of the tunnel, but just remember that a lot of traders right now are anticipating that the low is in and this is it, and we're going to go up again. Just be careful here. This Wall Street cheat sheet does definitely plays out over and over again. We have to make sure that when we get up to these levels here, that you need to be taking profits. Only if price gets above these resistance areas and closes a couple of daily candles above here, would you even consider getting back in again? Protection of capital is of the utmost importance here. So 25,338 and 28,411. Those are the two important levels. I would definitely be looking at selling here, or have you a plan in place that if it gets rejected here to get out of the market. You would obviously see in the media, this is it. We're going to the all-time high once again. Just be careful. We have to be very careful if we do get this bullish run to the upside. We saw exactly what happened here in August this year. And I'm on the daily here. Let me go to the 12-hour here. These massive wicks here that you see here to the upside, this is all whales selling here. You see all these wicks here. So they will get the emotions of retail to actually push the price up here, and the whales will sell and pushing price down. That's why they've got large wicks to the upside here. So be very careful when we see that, when you see that type of structure. There's clearly whale activity selling to retail. And then after that, as I say, we normally have a slow bleed, unfortunately, and that will come down to depression. This area here is very frustrating. You think Bitcoin's going to zero. A lot of the analysis is saying Bitcoin's going to zero, and it's a very tough period. But don't forget, as I said to you earlier, the money is made in the bear market. So this is where all the planning takes place. Or when you get to a bottom here, and the bottom is normally in a bear market, the bottom is normally 84 to 86% retracement in Bitcoin. And there I'm talking about sort of $10,500 to $11,000 will possibly be the bottom. And I'm using the word possibly. But you need to have your plan in place here to be getting your capital ready to buy these coins once we get down to this lower level here. Ready for the next move up. And that period also takes a long time. Remember what happened the last cycle? We hit a bottom here in December 2018. And this belief bottom was only in March 2020. So that is really over a year and 3 months period. So it's quite a frustrating period, this period. But just remember that after that, then we start moving up and we go repeat the cycle back to euphoria once again. Let's just have a look at the emotions that are coming through here. Depression. Daniel, Marius, depressed. Disappointed in crypto. Okay, it is calm. That the market will go up. It works in cycles. Absolutely. So just remember that the adoption curve. If we look at the adoption curve of any new products, so I'm just going to Google your adoption curve. I'm going to try and bring it up here. Images. And I'm just using a basic example here. So if you look at the adoption curve here on the right-hand side, this curve starts pushing up quite strongly here towards the end. And you can remember back in the day where we had the dot-com bubble and we also had cell phones. Most of the money was made here at the bottom here. And then that curve started pushing up. And then the late majority is right now with cell phones. And there's not much money to be made now in cell phones and the cards like we used to make in the early 2000s. And the same applies now with crypto. This adoption curve is starting to get steeper. So I would imagine the next bull cycle will possibly play out a bit longer. And Ed, you're right there. We need to be ready for the next cycle, because that next cycle could mean that we're moving up here into this curve that's getting steeper. And this could actually play out longer as more and more adoption comes through from the corporates out there. So yeah, we are heading into very exciting times.
Hi, Daniel, Jason, can I make a comment perhaps?
Sure.
Please, you're welcome.
Yeah, I think as far as the adoption is concerned, we're seeing uptick. Just in the last week, a few institutions around the world have introduced support services for banks and so on in Brazil and a few other places as well. We've seen our FSCA having published some draft regulations last week. And I believe, Jason, that adoption curve will accelerate once regulation comes through, because that gives certainty. Institutions are waiting. And I did say in my comment that I was calm. And the reason why I'm calm is, look, we're in a market now, crypto market, total valuation on $970 billion. It's under about 1 trillion. But the equity market, like I said to you this morning, Jason, is $106 trillion. So it is 0.009% of the equity market. If we just get 1% of that, or 2% of that, or institutional money coming in, and it will flow in once regulation is prevalent. And so I believe that the adoption curve will accelerate. We've seen PancakeSwap now going into cloud services as well. And Google and Coinbase having also announced a partnership where all Google's cloud-based clients will have access to Coinbase crypto support services. So it's good to see that there is significant activity from some of these major IT companies, social media companies in the world. And I shared a few slides last week on new investment going into blockchain and crypto right now. And I have 5 slides, and I can show you it is the big brothers, it's the JP Morgans, it's those are the people that's investing in new blockchain projects as well. So I'm very positive about the adoption that you just shared about this Wall Street cheat sheet. And that is the reason why I say I am calm.
Yeah.
Thank you.
Thanks, Ed, and thanks for bringing up that news that came out from Brazil. And I'm just going to read it to you.
Yeah.
Tether USDT, and this came out on Friday. Tether USDT to be available in over 24,000 ATMs across Brazil, and that's getting rolled out in November. 24,000 ATMs, and we're talking about USDT that is deemed to be a scam coin. How's that?
Yeah.
That is really something. It's just showing us the amount of adoption that's actually taking place. And the other thing is that when I'm talking about preparation here, and I've made reference to it last week, a coin like Phantom. A Phantom is a layer 1 coin. We hit a peak here of $3.50 in about October last year. And right now it's trading at 20 cents. Now, if you just work it out, this is a very, very good project. We had an all-time of 350 here in October, and it came up to retest in January this year. Today it's trading at 20 cents. I don't think that we're at the low yet. We still need to go into depression, and I think we're going to go a bit lower, maybe to 15 or even 12 cents. But this project is a very good project, and this project will go back to 350 in the next bull cycle. There's a strong possibility you'll do that. So just work it out for yourself. That's going to be over 3,000% gain back up to its previous all-time high where it is. So even if you put $1,000 in there, for example, and you take plus 3,000%, will go to over $30,000. That is just one coin. So the opportunity is coming, and we need to be prepared and make sure we've done the homework and what coins we're going to we're going to be buying into once we get into that depression stage. Thanks, Daniel.
Cool. Thank you, Jason, and thank you, Ed. Yes, it's just amazing what is happening and the kind of news that we get into our crypto world at this moment it's mind-boggling. And the banks in South Africa are all getting up to go into crypto. That's why they had all these restrictions on crypto deposits and all these things. They're just busy getting as much of their claws into crypto and getting themselves ready to make the money in this market. Don't you worry about what's going to happen in South Africa with that government gazette that was published last week with crypto advice becoming advice that you should have a license for. That's only middle of next year. In the meantime, we continue as is. But the way that we do this and the way that we present this, we're not giving financial advice at all 100%. We are 100% within the ambit of that proposed or government gazetted proposed new rules with that. So on that said, tomorrow night, Des and I will attend the Binance meetup in the theater in Pretoria. And if there's someone on this call, I heard someone say that the event is fully booked. If there's someone on the call that wants a ticket, I have one extra ticket for the event. So it's free of charge. You can be a guest tomorrow night at the Binance meetup. And the big things will be announced tomorrow night at that Binance meetup as well. And I look forward to that. At least we know that tomorrow night we're going to have some meatballs or something at the Binance meetup. But without further ado, allow me to get Marius to say something. Marius, I politely and eloquently introduced you earlier when you ran out your generator. So you missed the eloquent words about you or around you or about you. So it was good because you will get a bigger head. But Marius, just quickly tell us what you're learning.
Yeah, thank you, Daniel. Jason, thank you for your inputs. And Ed, thank you for your wise words. The only reason why Daniel and I want to be in the depression phase, because the next phase is we just want to be a few steps ahead of the cycle. So yes, as Ed said, and as we always say, this is the time where you need to be trained and get your information, get on places where you can get the information from. That is why we have that morning talk every morning, and that is why we have the crypto talks, and that is why we have various places where we can get trained. I personally am on the ultimate trading course, and I thoroughly enjoy that because I learn so much out of that course. And also on the signal, what I normally do is when we have certain growth in certain signals that we get, I share it on this group of that coin and the percentage growth. There's 4 or 5 coins that we received yesterday that I can't share now, but I can tell you the take profits on that coins on Qcoin, on the Qcoin exchange. So it is not the Qcoin, it's that one signal that I look at. It's from take profit. One is 11% till 64%. The other one is 4% to 20%, 4 to 25%, and the last one 4 to 26%. And that is all in the next 2 to 14 days. Hopefully next week I can share that coins with you with the profit percentage that we had. So yes, Daniel, that is where I am. I'm always also very bullish on the crypto market. We've been here before, and we're going to be here in the future as well. And that is where the market goes up and down, up and down. Get yourself ready. Get yourself prepared for the next bull run. It's definitely coming.
Cool. Yes. Thank you, Marius. And yeah, it's just a pity that you always share those coins with us behind the fact, after the fact, after you've done the profit takes on them. But it's good to see that, and it's good to be subscribed to that and get that info. And I just said that tongue in cheek, I'm a subscriber myself. But just allow me for one little moment to go and remind you of our website, thecryptoschool.co.za. And if you go subscribe there, you get access to our free stuff. But we also send you the invites to the Crypto Talk. Go like our the Crypto School YouTube channel. And just to show you, we have some traction. We have some people watching our videos. And that's purely not because of Marius's face, but 217 people watch that one, 309 people watch that one. It just depends on where the market is. We truly see the numbers go up when the market rallies and the numbers go down where we are now. But this is the time that we make ourselves to be in the best possible position going forward. Thank you, guys, for your contribution tonight. Thank you, Ed, for jumping in. You know that you're always welcome. I've made you co-host the moment that I've seen you on the call for you to be able to jump in. And thank you, Marius. Thank you, Jason. We're going to go around Robin and last words from everyone. And then we say good night. Jason, last words from you tonight first.
Thanks, Daniel. As I said, it's a very emotional period right now. And unfortunately, this emotional period is going to carry on for the next couple of months. And we need to be strong through this period with the belief that we're going to obviously go into the next bull run again, where the money is going to be made. So that is my parting words. Thanks, Daniel.
Cool. That's very wise words. But I was going to nearly say Aina. But the Marius, last words from you.
Yes, Daniel, what the farmers do when the dams are dry, they build the dams higher, the walls of the dams, and they scrape the dams. And that is just what I want to iterate again, is get yourself educated, get yourself ready for the next growth session and the next bull run.
Yes, soon we will have all those people back on the call, and we will have all of them, and the numbers will be cool, and everyone will shout about the numbers. But at this stage, we're the handful of people that haven't capitulated yet. And so thank you for a great evening, ladies and gentlemen. We wish you some green candles in the weekend in whatever crypto you hold. Have a blessed one. Cheers. Goodbye.